Evan, great to have you back.
Thanks so much, Craig. Thanks for having me.
Recruiter.com, an on-demand recruiting platform providing flexible talent acquisition solutions that scale from startups to the Fortune 100. Evan, for viewers new to the story, please give us a brief overview of Recruiter.com.
Sure, and thanks again. Recruiter.com is really a startup. We've been a startup on NASDAQ. We actually uplisted to NASDAQ July of 21. But the company is really only a few years old. We are a destination site for recruiters. We have a job board for recruiters, a marketplace for recruiters. We do a lot of things to help recruiters do their businesses better. And companies, large and small, leverage our platform to access these recruiters. But let's take a step back just for 1 second. The world of talent acquisition, and we hear about it every day in the media. I'm actually on CNBC talking about it once a month, right before the jobs report. There have been two ways to hire. You either did it yourself, so you posted a job on ZipRecruiter or Indeed or LinkedIn, or you hired a headhunter and you paid 20 to 30% of a salary. We're the guys that are in between. And what people really want to do is they want to do it they want someone else to do it, but do it for them, right? It's as if you did it, but not paying the big giant fees. And that's what companies come to us, large and small, to do.
Now, is that what on-demand recruiting is, Evan? And tell us more about on-demand recruiting and its importance to Recruiter.com.
Yeah, absolutely. So on-demand recruiting is really the flagship, our flagship product, our flagship service. And we really proved out this model throughout 22. We did a bunch of acquisitions in 21 to really formulate the product. And in 22, it really gelled with great product market fit. You know, we ended 22 with companies like Cerner and Zoom and Pfizer and Geico, all trusting our recruiters to help them with really their most precious asset, which is in hiring. And our recruiters, our on-demand recruiters, work through our platform on behalf of those clients, helping them find talent. And that's really become the lion's share of our overall revenue. And then we have an ancillary marketplace service, a lot of self-service revenue, very high margin revenue that supports that overall product line.
Evan, you mentioned revenue. Let us look at it a little more closely right now. Recruiter.com in November announced its third quarter 2022 financial results. Revenue for that quarter was $7 million. That was a growth rate of 11% year on year and indicative of the consistent growth in revenues that the company has been experiencing. What has been spurring that growth, Evan, and what is the pathway to profitability for Recruiter.com?
Sure. So our Q3 numbers were year over year very strong, but we started to really get a sense of our tech sector. About 20% of our revenue was coming from the tech sector and about 15% coming from the recruiting and staffing sector. And we really got a sense towards the end of Q3 that those numbers are really going to be hit hard. And we really started to go into really strong OpEx mode and adjusting our operating expenses to align with that overall gross profit. So we really saw that happening probably a couple of weeks ahead of everybody else. And certainly the major companies, because we always use recruiters as that sort of air traffic controller of what's going on in the overall job market. We thought companies were just overhiring. And what do you know? Companies were overhiring. So our real mission, and we set up a 3-year mission, and we talked about this in our earnings call. You know, in 21, it was really about product market fit, and 22 was about growth towards profitable adjusted EBITDA. And that's really been our primary focus throughout this year. And we gave some guidance in our Q3 earnings that we expect to be on a positive adjusted EBITDA in Q1 of this year. So we did hit some operational sides, some of our software sides. We actually in Q4, and these are all public, we spun off one of our software platforms to really reduce OpEx even further, still benefiting from the overall revenue itself. It's a long-winded answer, but a lot went on. You know, we take every day seriously, and every day matters, and we take our delivery for our shareholders very, very seriously.
Absolutely, Evan. Let's take another step back in time to October when Recruiter.com announced the next step in its strategic plan to increase shareholder value. Central to that plan, Evan, was a reduction in operating expenses, including a reduction in your own salary. Please elaborate on the key elements of that plan.
Thanks. So I took a 20% cut in salary, as did some of the other management, and we really right-sized the company a lot around gross profit. So like others, we overstaffed slightly ahead of demand that we expected to be getting from our clients. Our clients would tell us what they expect, and we were staffing accordingly. And we really used October to really clean up our overall operating expenses. No stone unturned. Every vendor was renegotiated with across the board. We had some debt that we were negotiating as well, but really took our operating expenses seriously, and we're really living in that now.
Give us your essential value proposition in closing now, Evan. Why should investors take an interest in Recruiter.com right now?
Sure. So our stock is, very, very undervalued, as most. And I think that a lot of what we saw really from September until today was really as a result of us filing a shelf. We filed a shelf like good housekeeping. We became effective in August. It's something good housekeeping to have. And there was this assumption that we were going to be selling capital, and we did consider it. We have some debenture notes that aren't due until August of 23, and we thought we would tap the capital markets for that. Clearly, we're not going to do that now. We don't need the cash to provide for our overall operating expenses. We've really aligned that accordingly, and we're just going to continue to grow the business as if we were a startup. If you look at our stock as it relates to overall sales, we're really trading at a fraction of our overall sales. And if you look at our comps, whether it's a Korn Ferry who's trading at 1x revenue, or an Upwork or a Fiverr that are trading at multiple times revenues, we are clearly, as it relates to our overall competition, really, really, really undervalued from a significant perspective. So management owns over 12% of the company. We have a pretty low float that's out there today. But if you look at our trailing 12, $28 million trailing 12, nice growth rates, et cetera, in terms of our overall stock, it's pretty significant. Companies are now going to still need to hire. Even though we hear about layoffs every day, the quit rates are still higher than ever before. Companies are still going to have to hire. Now, do you want to hire a full-time recruiter in-house? No, you actually want to use an on-demand solution. On-demand solutions typically do very, very well in tight markets. And certainly when there's a looming recession, I don't want to have to add another full-time resource with healthcare benefits and all those other things. I'd rather tap a platform like ours that allows companies to scale up and scale down.
It is a great story, Evan, and you tell it so well. Thanks for being with us.
Thanks so much.